Hey guys, welcome back to the show. Yeah, hold on. Let me actually get a little bit better situated because I just got home. So I actually got to move this. The curtain has fallen. All right. Anyways, I completely just like ran in here and just slammed into the chair and moved everything. So, how's everyone going? Well, how's everyone doing tonight? Right? Because hold on, I need some crack coffee, as they would say. I am late. I'm a minute late. Yeah, I got to get veteran on that. So, yeah, first things first, I actually want to cover a couple things because I know there's a subscriber in here in the chat who did request us to talk about two particular case studies. We'll kind of look at them live together. And again, if you guys have any questions, of course, ask them in the comments and then I'll bring it up. It's so much better on this platform, StreamYard, even though the audio quality might not be as good as the other software. The other software doesn't allow me to bring you guys up. So, because that's really important in my opinion, because this is about the engagement with you guys, not about, just being a monologue here. Right. You guys can just watch the videos for that stuff and then that's fine. And also, let me know how you guys enjoyed the most recent videos. The quote, actually, the price to believe ratio, I can't take credit for that. That is a subscriber in here. So he can actually shout himself out if he wants to. I don't know if he wants that or not. But yeah, so the first order of business is talking about the bank. So the bank's lending is kind of showing us a sign. So we've already been talking about a couple times on the channel about the potential for a recession, or that the high likelihood that there would be one. We just didn't know the severity of it. But looking at now, I think all the big banks have reported already. I think the one missing is Bank of America, but don't quote me on that. I don't think Bank of America has reported, but we did get Citigroup. We got we got the investment banks such as Morgan Stanley, Goldman Sachs. We did get JP Morgan Chase. We got Wells Fargo. Wells Fargo is very important because Wells Fargo does a lot of lending in homes, right? They have a huge portfolio of mortgages. So their insight is really good to see what's going to go on potentially with the housing market. Because if you are one to believe that the housing market is very hot because a lot of people have easy access to capital, then you want to actually look at the bank that is most involved in that area, which is Wells Fargo. And so Wells Fargo did report that their lending growth is down substantially. So this takes time to show up, but I'd say if I had to just put a number on it, it's probably, I'd say we would start to see it in like 6 months, but there's not really a way to tell. And again, none of this is really surprising. It's a culmination of a bunch of things. And so again, like I've talked about, some stocks in the portfolio, in the public portfolio, portfolio, are going to do fairly poorly over the short to medium term if we do enter somewhat of a recession or somewhat of a crunch for consumer spending. There is a video that I'm still debating if I'm being too harsh in it, and I haven't released it yet. It's actually uploaded. It's another reaction video, and it's about 40-ish minutes long on CNBC. CNBC did a video on taxation that was quite interesting, to say the least. But I'm debating on either redoing it or just keeping the one that's there. I don't know if I'm being too harsh on it. Drop it. All right, maybe I'll drop it. I'll probably drop it while I go, because I have to do this one. It has to be a shorter live stream because I actually have to pick up my folks from the airport. So yeah, they decided to arrive late in town, so that'll be fun. All right, anyways, so CNBC deserves. Okay, so I'll say this one first. Citi's price to believe ratio is not as good as TTCS. Yeah, that's good. And then CNBC deserves. Okay, so I'll go ahead and drop it when I'm probably in the car because it's already uploaded and everything. I don't think it has a thumbnail. But with those videos, those videos aren't meant to garner a lot of attention. The Jeremy one was I didn't put a thumbnail on that. That's actually YouTube that decided that that was the image it was going to use. And I think that that actually helped the video, which is really funny. And if no one believes me on that, I'll like screen record it and we'll go into it. You'll see there's like no thumbnail. It was just kind of a happy accident. But those reaction videos are, you know, again, requests that come in. This one was a request by a close friend of mine that works in taxes, and he thought it was hilarious. So then I obliged and did that. Okay, so the let me get to the two companies that are requested. And these two are Chinese companies. So this came from a subscriber who requested both of these companies. Let me see if I have them written down here. Their tickers. I don't have the tickers memorized. I apologize. Don't tell me where did I put them? I put it here on the list. Where are you? Oh, my stupid butt probably erased them because I was like, oh, I already seen these. Oh, no, here they are. All right, beautiful. I thought I erased them for a second. All right, let's take out these one at a time. And I'm gonna head and put them over here. And let's go here. I'm just organizing myself, guys. So okay, so I can already tell, and we're gonna use a free website that I'm totally sponsored by. If you can't tell, that's sarcasm. Just in case, because you know some people might not catch that. I'm told that my sarcastic voice is sometimes not very sarcastic sounding. So I have too many tabs open. Let me clean up here. Okay, so the first one we're going to talk about is a stock, and again, this individual did request this, so no one. I don't want anyone to think like this person is bullish on these stocks because I read their comments, and I'm doing this because I did promise you, and I'm a man of my word, and I'm going to do it. All right, so the first stock is called is that an R? Farmy Inc. Okay, so Farmy Inc. And I'll go ahead and share my screen, and we're literally just going to look at this kind of like a quick view of it, and I'm going to use this free resource right here. So Farmy stock, you can kind of see where they're located. This is a Chinese company. Guarantee you this is probably like some sort of VIE weird stuff thing that, because I read your comment on it and you clearly kind of already know what this is. But yeah, wellness trends. Okay, but this is the performance of the stock. It's down about 90% almost. I think they IPO'd. Yeah, look at that. Okay, so this is one of those. I bet you it's one of those. This either IPO'd or they did what a lot of these companies do, or they merge with a dead US company in order to go public. I'd have to actually look into that, but probably that's what occurred here. And I bet you if I take a look at this market cap, let me just go here to actually tell you real quick. Enterprise value. Okay, so it's not a negative enterprise value because I've seen some of these Chinese VIEs with enterprise values in the negatives, and that basically implies that the market completely doesn't even believe the numbers in that company. But in this instance, we don't have actually a negative enterprise value, which is surprising because I was expecting, to be honest, you know, to look at this and be like, oh, it's gonna have a negative enterprise value. So we're not gonna spend all the time here, but just to actually view these. So this one, let me actually quickly check this out. Okay, so absolutely destroying share dilution. What the absolute living garbage is this? I believe you're giving me more context. The high was $10 and now it's 12 cents. It's down 99%. Yeah, that was over that recorded period that it was down only that much. But yeah, it's crazy. Okay, so the enterprise value is negative. Okay, there we go. So, but I've seen a lot of these Chinese companies that actually do trade at negative enterprise values. So yeah. Then the last one that you asked me to look at actually was this company called Blue Hat. So let me actually look at Blue Hat. It even shows up here. Yeah, here we go. Blue Hat Interactive. Probably also kind of very similar comparison in terms of how. Yeah. Okay. So these are. I mean, I know you sent me these as like a complete joke, but yeah, let's actually take a look at the share dilution, see what's up. Yeah, just absolute hot garbage stocks. So they're trading at 60 cents last year. Okay, so the additional 500%. Yeah, I mean, like, okay, yeah, these are the two shit pile. You know that? Yeah, exactly. Right here. This comment's really good. Throw this into the two shit pile. I mean, these are. If you guys are enjoying your Friday, there you go. You have seen probably two extremely, I don't know how to call it, maybe two shit stocks. Okay. Um, okay. So, but yeah, those two stocks. The first one, yeah, it does apparently own a decent portion of another stock, and then because if you include that as a negative enterprise value, but of course, what I say is like the risk is definitely not worth it if you were ever thinking about making it an actual position. That would be like extraordinary speculation, any of those two stocks, but. All right. Oh, and this is the best part. Okay, so Elemento is giving us some extra knowledge. So this is kind of like a case study of potentially very fishy practices, but they apparently did a private equity sale. Yeah, that's how you know it was a complete enriching moment. That was great. That was great. Okay, so in essence, about what everything's going on. Let's see, because I also. Well, I'm going to drop that video because there's a lot of good information in that video with the reaction to CNBC's video. And in there, I talk a lot about taxation and some interesting phenomena that we can observe. Again, I kind of went at them because they said some things that were kind of. But anyways, anyone who's a tax accountant, focusing on taxes, you're gonna perhaps enjoy that video. I mean, go watch that video for yourself, and then without my commentary, and then watch it with my commentary, and see if you agree or disagree. I would love to hear your opinion down in the comments. Oh, and there's another thing. So there is interesting chatter regarding this, and I was talking to Chris from Strongman Personal Finance about this individual, this YouTuber that's up and coming and very interested in Voyager stock. So I'm gonna have to cover Voyager and kind of accelerate that video. Again, I'm getting ready all of the explanations for the different protocols and coins and stuff, and then do the Voyager Coinbase video because it is in the request. For the person who did request it, I haven't forgotten your request. Do not worry. Okay, so aside from that note, I did update you guys on my portfolio, kind of what's been going on, just been adding to some positions here and there. I'm done selling ConocoPhillips. I have done it. And I'm very happy that since the last update and this update, I was able to get very good prices on what I believe ConocoPhillips is trading at now. Some people, again, might think that, oil is going to go even higher. Maybe it does, but it's not a bet I'm kind of willing to make. BHP, similar story. I took some profits off of BHP, just basically trimmed the position down significantly and kind of kept like a watch position on it. And then Rio Tinto, which is the other commodity play, I'm not really selling that one yet. Yeah, again, Thor Industries, doing Thor Industries, what I kind of suspected would happen, concerns about the consumer. And even though it looks cheap, it's going to probably look even cheaper because we have to be careful with those kinds of companies, especially in the times that we're in. But remember that it plays a role in the portfolio. Should I have been wrong, and should the consumer have done really well, because it was not priced for a good consumer, definitely. Yes. Okay. So you also sold your Chevron. You see, like I think that's a prudent move. We'll see if that's like the best move ever, but we'll see. We won't always pick the tops. We won't always pick the bottoms, but we do an educated decision, and that's the best we can hope for, and hopefully that works. Oh, yeah, and I just see my eyes are kind of roaming through the comment section here, but I did mention, or not mention, I did notice this comment right here, Utz Brands. So Utz Brands is I'll actually show you guys. You guys might be familiar with Utz, or maybe not. So I didn't want that. I want the stock. I don't want the chips. it pulled up like Amazon. It's like, you want to buy the chips? I'm just like, no, I don't want to buy the chips right now. I've never actually had their chips. I have to confess this, and let's actually get rid of this stuff. We don't need this. So Utz Brands did IPO through a SPAC, and it actually, you can see around here, you can tell it was a SPAC because it hovered around the $10 range, just under $10. Had this massive run up, right? And then just completely crashed down. And some people probably were buying there. Unfortunately for them, they probably weren't looking at the valuation, because I actually was looking at the stock at the time. I do pay attention to a bunch of stocks all the time. And one thing that was interesting, it clearly overvalued, by the way. It was clearly overvalued. But I think it was trading at, in terms of like a gap PE metric, I think it was like 30 something when it was up there, and something that wasn't growing as tremendously as probably the PE was implying. And this is a small company, it's like 2 billion, and a lot of dividend investors do like this. I do know that there is a dividend investor because one of my friends actually follows the dividend investing community. I think the guy's name is like PPC, and he's like a big dividend investor channel. But he bought this. But that guy's from my understanding, it's a small part of his portfolio, and the guy's very well off. He's a real estate developer, something like that. He can afford to, do some shenanigans. Okay, I have a question. Is this about MGA? Yeah, Magna International is well managed. Are you, any Canadians can attest to that? Go ahead in the comments down below if you have any opinions about Magna. Oh, really? Okay, and I just saw this one above it. You just began. Okay, so you got to give me the inside scoop. No, I'm kidding. Don't do that. But yeah, you can tell us like how you feel about it, and yeah, let me know if you like it or not. I always like to know that the businesses I own, the employees are happy, because if you have happy employees, happy talent, good talent, you can retain that good talent, and then you will make more money in the end in doing that strategy. So always like to know if a place is a good place to work for. Okay. Okay. So then I'm seeing Utz is an okay product. Okay. So, Elemental Tomago. So I'll answer your question with regarding those stocks. So the thing is, a lot of those smaller Chinese stocks are, and I'll actually stop sharing this so I can talk to you here. But a lot of those Chinese stocks are, how do I put this? Traps. So you can actually, and I implore you to actually watch this documentary. I actually have mentioned this documentary in the past, and it's called The China Hustle. It's free on YouTube. It's a very easy to digest, and that's why I'm recommending it. It actually breaks down a more complicated topic into an easy to understand format, very well edited. So, and good audio. It's not going to be some like, guy with the green screen right here. Okay. You got to poke fun at yourself. Anyways, but it's very well made, and it helps. It's meant to be easy to understand, right? So it gets the main message. What I would tell you across is those small companies, they're extraordinarily high risk. Consider every dollar you put into those as a extraordinary high bet that it's not a rug pull scam. And yeah, China did engage in that a lot, by the way. I mean, they engage in it in a variety of different ways. And again, I always, this is a consistent message that I don't actually retract, even though I state that the sentiment might change and, eventually, and Chinese stocks might go up, but I don't see the connection. I see them all as, they're all tools. And when you put that into my perspective, you can probably understand this perspective that I try to provide. I see them all as tools to fuel capital inflow to China and build itself up without necessarily providing an enrichment mechanism to the end investor. And I mean, we can talk about, for example, the Charlie Munger situation, because I haven't had a live stream with you guys since that happened. And I don't know if anyone has any comments that they want to talk about that, or I already see a question about Twitter. Going right to it, because it's a good topic of conversation. Yeah, with Twitter, Musk is going to apparently buy it, and so we saw that Tesla stock actually dipped on that news, because the implication is that Elon Musk is going to sell some Tesla stock. But I don't. Yeah, I think if he would to do it, let's entertain the idea for a second. I don't know if he would do it outright himself, or he would do it with a group of people. which he could easily do. That man has so much influence in terms of like, heck, if Elon Musk came to me tomorrow and was like, "Hey, Fabio, let's like do this thing," and I'm just like, "All right, cool. Like, why not?" You know? And like, let's be honest. I don't know if there's a lot of people that would be like, "No, I'm not doing anything with you." Um, you know, I don't know. But I also think there is a possibility that but kind of like a lower end possibility that he might actually be using this as a publicity stunt to start something new. And he could also do that. I mean, the quantity of people that absolutely love the man. And you know me, I am kind of like in terms of Elon Musk, I'm kind of like the milquetoast fence sitter on that topic. I don't hate him. I don't um love him, like I don't like idolize him or anything like that, but I appreciate what he's done, you know, and I can see it as like a very good accomplishment, something that I think is very unlikely that I will ever achieve, right? So and in that sense I, you know, say great. But I think if he did that and he kind of put in the moves, and I mean he wants to take it private, but I would actually invest in Twitter in that sense, because the thing is I don't use Twitter at all, because I think Twitter's kind of like vile. If you ask me, Twitter's like, I don't know. I just don't like Twitter. I prefer YouTube, and I prefer, heck, I use Instagram. I don't really use TikTok, admittedly. As you can see, there's nothing posted on the Capital Mindset TikTok, even though I keep promising that I'm going to post stuff. I just have to like get past it, because I think I'd cringe too much trying to do one of the dances or something. I'm not going to do the dance. I refuse to do the dances. I'll figure out how else to do it. And yeah, so I mean, you're talking about SPACs here, but yeah, SPACs were all the craze, and yes, that individual did promote a lot of SPACs, and you know, but SPACs, you got to understand, SPACs are kind of like it was one way of going public, but it's also kind of like in some instances, like the rejects of the investment world went into SPACs. Not all of them. I'm painting a broad brushstroke there, but I have a SPAC. I have one fun SPAC that I have in there. It's BurgerFi, you know, and so I don't feel like it's a bad thing me mentioning their name, even though they're a micro cap, because I'm obviously not saying, oh, go out and buy BurgerFi. I'm telling you right now, there's the investment thesis. It's the fun stock. Right? I repeat that every time, you know, just in case. Anyways, capital mindset isn't a guy with a green screen. No, I'm more than that. Okay. Yeah, there was that was weird. This software was like, nope, I'm not going to open your comment. All right, and then it's back. I'm a man with offices and libraries. Oh yes, I'm a man of sophistication. Remember, when the library's out, that's because I'm valuing knowledge above money, right? I took the Ty Lopez course, and knowledge over money, everyone. Knowledge. All right. You know what? I should do that. I should actually make this green screen like a bathroom. Just oh yeah, that's right. Because you're actually going with continuity, right? I forgot the lore of this room right here. Remember that room all the way in the back on this side? Oh, that side, that one right there. That's actually my executive bathroom, right? That's the lore of this office space, right? We got to be consistent in the lore of capital mindset. Sorry, continuity. Okay, so here we go. So, oh, come on. I thought it's like a comment on Charlie Munger, and I read Tattooed Chef. I was like, let's go. All right. I'm really curious though, in all seriousness, why do you guys think Charlie Munger bought that? All right. So my general view is that the large cap Chinese stocks are relatively safe, but small caps are likely scams. At a certain valuation, though, it's tempting to speculate. Of course, yeah. Why not? You know, everyone has the right to gamble, and a gamble can turn out well now and again. Just, you know, I would say that it would be responsible to acknowledge that. And of course, I understand the view on the first part of and then I guess you also understand my view on that. Okay. And again, I just really want to know what you guys all think about the Charlie Munger thing, because and I like AMD. Yes. Okay. Let me be very clear on that. And I like AMD over NVIDIA on a valuation basis, on a technology basis, NVIDIA. However, there's more for me to learn in that space because, admittedly, I'm not an absolute expert in the semiconductor space. Obviously, I don't work in that space. No one would pay me to design one. Okay, we can get that clear, right? No one's going to pay me any money to design one of these things. So, as far as the valuations of the businesses go right now, AMD is more favorable to me. But you see that NVIDIA, the market is pricing in way more potential because their technology, admittedly, right now has more reach at the present moment. So, I just bought a new computer, and inside I put actually an NVIDIA card and in an Intel card. Um, and I think as far as NVIDIA is concerned, they are actually coming out with a CPU, and we know that Intel's coming out with a GPU. So how will that play out in the competition? More competition, great. I love it. So I like it, but that's what I mean by that. It's on a valuation basis. It's not on technology. um, Yeah, okay, so telecoms, I don't really like telecoms because for me they're in that maturity phase, and depending on your phase in life, right? They are kind of like they're kind of like a bond-like instruments in a lot of ways. And they focus primarily on using debt, right, to build out the infrastructure. And at any point, I don't really know what the future holds in terms of technology. So for example, you probably guys know Google Fi. Google Fi is an interesting phone plan that I actually might end up using because I used to have AT&T just for the HBO Max, because they were like, okay, you can get like the same blah blah blah, unlimited blah blah blah, and you get HBO Max in there for free. And I like HBO Max. So then I was like, all right, cool. I switched from Verizon to AT&T. And now I'm thinking, okay, well, there's not really a reason now because they're probably going to separate that unless I keep it grandfathered. And I have to call them and actually make sure. But otherwise, I'll probably go with Google Fi. Google Fi is not a competition. I want to be very clear because they use the other networks. So, but my point with that is I don't know how the space will evolve. And something that is so mature, so slow to move, something like Verizon and AT&T, and with all the debt that they have because it's necessary for their business, it makes it so that if something comes to disrupt them, which that very well could happen, that's definitely not the type of it. That's a perfect case study of an industry that is not going to be able to handle something new right now in the present moment. How we use or how we establish communications is very capital intensive, so that's actually their moat. But yes, that's basically why. Um, well, I'll comment just on this part, but 40% returns is will make you one of the greatest investors of all time over the course of your life. If you achieve that, yeah. Um, Semis are falling. Oh yes, that's another thing I completely forgot. You see, this is what happens when your brain's like whacked out the whole day. But we were just talking about semiconductors, and semiconductors are all kind of falling. So we have Intel, right? So let me actually pull up Intel, and we can talk about Intel because on right here. So share screen, and we go. I love having multiple screens. It's so much more convenient. So right here we have Intel down to $45. Look at that, down 2.85% on Thursday. Not today because today the market was closed, but regardless, I've already have the videos on Intel on this channel. I think everyone here knows that when I sold and why I sold was more important than when I sold. But for those of you who are newer to the channel, I did have Intel for a moment, and then I sold it for a very small, like very, very small profit. And I sold it because I disagree with management's allocation to capital, blah, 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 blah. But point is, right here, it's coming down, of course. And I said, and I've stated this in past live streams, that at the right price, I'm interested in entering Intel again. I do believe the investments that they're making are good and necessary. I just didn't agree with how they were acquiring those funds. So aside from that, we also can pull up AMD because AMD is, the hot stock right here, down 93. I made my original video like around here when it was $100, and look how wrong I was for a long time. And I wasn't even paying attention to it. And then one day I looked at AMD when I was up here, and I was like, huh, well, it's 50% higher. And then now here, longer term, we're down just 7% ish. Well, I don't know exactly. It was around here. I don't know exact date, but it was like $100. And so AMD, I kind of stick by it, even though the valuation is getting better and better and better. And I'm getting excited because I would love to own AMD. In fact, maybe I don't even know which one's going to be the winner, and maybe I pick all of them. I don't know. I haven't really like thought it through. That will take me like a day, a couple days, maybe a week to think this through. You can kind of see that I used to talk about a little bit Spotify, and I said I was thinking about Spotify, and then I still haven't made a decision on Spotify. So it's not that I've stopped looking into Spotify. It's just that's sometimes how long it can take me to make a decision. Okay, it's not analysis paralysis per se. It's just that I like to be very picky when I put things in. Some companies I'll get very quickly. Some companies will take me some time, but I'm patient. And oftentimes I think like just following how I think, oftentimes, being more conservative than aggressive will put me in a good position. That's my belief. Okay. And then you heard that Charlie Munger got margin called. Okay. The thing is, that's so interesting that they use that much margin, because they always say that if you're smart, you don't need margin. Why would he use margin? Right. Yeah. So I see other people saying he doubt he bought on margin, but yeah, because they've criticized people who buy on margin. These companies are all like money printers. And the thing is, I have a speculative investment in Overstock that might be in some way a challenge to those companies, but those companies in isolation. So if you take a look at like ICE International Continental Exchange, I'm surprised they're actually trading at that valuation. But these guys are all like money printers. All of those that you mentioned, like they just print money. Kind of a literal sense. He did buy Alibaba Margin. He confirmed this at the Daily Journal press conferences. Oh, I had no idea, Elemental Tomago. So he usually states that, that's a bad thing. So my biggest position is Google. I'm curious, would you ever consider adding more? Yes, of course. No. Like, okay, so Google is my biggest position too. So there we go. We are fellow shareholders. And I'd say I'd like to add more to Google if it fell right now below 2000. If it fell below 2000, I would add more to my Google position. Or if it got closer to 2000, I'd begin to like nibble on the Google position. But and it could happen, right? But if we see like a lot of pessimism in the market, anything could happen. But I'm in no rush. With Google, I gotta actually say that even though it says I'm not adding, I will add like occasionally like 1 share, maybe 2 shares, just occasionally. And you heard Google Fi is terrible. Well, yeah, Google has a ton of terrible products, terrible ideas, but I'll give it a try, and I'll let you guys know. How about that? Because the thing with Google Fi is, I know that they, from what I understand, they use everyone else's network, and then you kind of switch between what network is. And I think there might be multiple pays or something. Or Google Fi uses T-Mobile. I thought they used all of them. I could be wrong then. But yeah. I'm wondering what the alternative to terminal multiples. I noticed you talked about it with the Tesla bull. Thanks. So there's terminal multiple approach and terminal growth approach. Both of those are used often. Terminal multiple approach is very easy to set up. That's why it's very popular. My gosh, that's like taking 2 margins, but like the long-term debt one is a better form of margin. Yeah, but yeah, that's interesting. All right, so everyone know. You see, I don't know when he sold exactly, but maybe yeah. I just don't know. We don't know why he sold, and it's very interesting conversation to be had. Yeah, I don't know what to say about that. I mean, okay, now Intel's at a much better price, so I see that. Yeah. Okay, sure. You can request another smaller company. Yes, but yes, you can give me another small company. It's not a Chinese stock. It's also a super small market cap, but not a Chinese company. Yeah, sure. Okay, I'll never. Oh gosh, that's incredible. Well, he did a 30%. Actually, I don't know if you're watching out there, but one of you beautiful, I think you're a gentleman, it gave me an actual spreadsheet with all the returns of that YouTuber's stocks, all of them, right? And this person has tracked them. And okay, let me actually, I'll write that one down. Eco wave power, and I'll finish my thought. Okay, so the point is, this person gave me the entirety of this person's portfolio, and turns out the total return thus far, drum roll, 35%. Yeah, that's right, 35% apparently. So that's okay. So that's an individual who actually, and again, the reason why I was quite aggressive in the reaction video is you have to understand the context. I have received a decent amount of messages on both my Instagram, my email, and you take it with a grain of salt, anecdotal examples. But oh, and that's total returns, JP. So that to answer this question, but the amount of people that were newer to the market, it's usually the same story. So I started to notice a pattern of who he kind of targets: people who are newer to the market, and those oftentimes are very susceptible. Again, he's a very good entertainer, very easy to understand, and all that jazz. Okay, so then he encourages a lot of them from, again, what I'm told. Right, I can't say that I've tried it and tested it out and been like, oh, I can't afford it, blah blah blah. But I was told that he does, not him per se, I have to be very careful with my words, but in those phone calls, these people experienced wording. They heard some wording that might have you see how just in case, guys, just in case, they heard some wording and they interpreted as if the other person on the call had been encouraging this individual to use credit card debt as a form to pay for said services. Okay, that's the way I'll say it. All right. And so this individual with a 35% total return, and according to what this lovely subscriber has provided, was actually, I don't know. I don't even know what to say to that at that point. I just don't even know what to say to that. Yeah, I really don't know. So yeah, at least he's in the green. Yeah, maybe it is kind of surprising. And by the way, Patrick, if you didn't hear it, it was total. So when I saw the spreadsheet, it was total. But yes. And that would explain the return. They talk about total returns rather than annualized. Yeah. Is Magna going to be a core position in your portfolio? Yes. Well, actually, what do I have it designated? It could end up being, depending on the valuation I get. That's what I'll say. And oftentimes it's a lot of the reasoning as to how I justify, is something going to be core, something not going to be core. So it's quality. That's the primary. I think Magna is a quality company, and durable moat and all that stuff. And then we get to valuation. If the valuation is really, really compelling and it fits all the criteria, I'm more than happy to just say, boom, let's make it into a core. But the reason why I'm kind of slow dipping into Magna, 3M, and why I sold Honeywell, because I kept everything I sell, I just keep it there so that newer people, because the channel is still small, and as we grow, newer people can come on and say, oh, hey, okay, so these are the old stocks you used to be invested in. So it's nothing can go away. And then maybe I make videos on like case studies on them, which I still have to do on some of them. But again, those are kind of on the last priority because they don't provide new modern value. Taking a look at, why I bought Abby in 2019 or whatever, or whenever I bought it, I forget. It was like 2019. See, when it gets that long, you start forgetting when. But it doesn't provide that level of value. So Magna International, these newer stocks, they take priority because I think it's good to like lay out the current framework of my thought process, which could be completely wrong, stupid, or whatever, but it's just to get it out there. And yes, so I think I answered it. It could be. Yeah, you see, like, because the longer you're in the market, that just makes you better, right? Longness in the market, betterness in the market. That's how it works. And yes, in the past 2 years, tons of people have done way better than 30%. But that's the thing. So if you take the snapshot of a time when we have tons of liquidity entering the market, it looks really good because his strategy was picking stocks that were focused on that. Not maybe I don't even know if he was smart enough to understand what he was buying was the ones to benefit from high liquidity, which is why I tell you, if liquidity returns in a very meaningful way, those stocks, those high short interest, non-profitable stocks, and then you see inflation concerns come down, those might just have a spurt, right? They may not return to original prices, but they could have a spurt. It's not my cup of tea. That's not, but like, if someone is a trader and they're a very good trader, they might identify that and kind of take that play. But that's not my cup of tea. I like to kind of just buy my stocks and then just do other things, work on other things, and then just like let them do their thing. All right. I tell you, like, I think it's very healthy to not look at your stocks every day. I don't look at my stocks every day. But yes. Okay, so we got some questions. A lot of people who bought only big tech and assume they can pick anything that it will be a huge winner. We've got massive levels of survivorship bias going on in the market right now. Yes, but a lot of new people came into the market, and I think it's good because it introduced a lot of people. Like, I think, for example, and I had this discussion in the past, like the one good thing about those people that we have all these doubts about is that at least at the very least they brought people into the market, at the very least. Now take it to its extreme, they might actually harm people a lot more, but there's a lot of people that watched them but didn't fall for their shenanigans, and then they only just viewed them on YouTube or whatever, and now they're interested in bettering their financial futures. And then they go out and they actually learn the right stuff, right? They actually learn from that. I can tell you that I know a couple of them that actually, because it was funny because even though I'm friends with them, we never really talked about stocks. I never had that conversation with some of my friends, but they watch YouTube, and then they got into YouTube finance, and then all of a sudden they got an interest for stocks. They started watching those creators, and then we started having conversation. I was like, oh, you guys are interested in stocks, and then they branched off. I think all of my I think every single one of my friends that, again, most of them are not even interested in finance whatsoever, but now they're at least interested in investing and growing their wealth. They got introduced in that way. So that's why I stated what I stated way back when, and one of Strongman's. So he's like a Robert Kiyosaki figure, right? Robert Kiyosaki, who's kind of, we know about him. We know about the whole ordeal with the MLM thing, Rich Dad, Poor Dad thing. But even then, the one grain of light in that dark abyss is that he got a lot of people to think about wealth in a different way, or at least begin their journey, right? Sometimes, even though you write a stupid book with very simple advice, some people have to read it, right? Okay, so so I'm saying length matters. Yes, actually, that's actually one of the highlights in a spreadsheet sent to me by a subscriber, and this person did a very detailed sheet. I'm not going to share their sheet publicly unless they give me permission, because clearly they put a lot of work. In fact, they're tracking me too, so good on them. But they're tracking a bunch of people, and they were very kind enough. And I still have to respond to the email. If you're watching, I'll respond to email shortly. But I'm very appreciative of that, and I'm very appreciative of seeing how much work you put into actually keeping track of everyone and the like. And so, yeah, that's actually true. It, based on what I'm seeing, that's the majority of the gains that are keeping them up. Okay, so let's have someone. What's the weirdest company you've ever analyzed? FYI. Weirdest one I've analyzed. Jeez. I know it has to be okay. Weird in what way? Because there's weird in terms of like you know what? Rocket Mortgage. Rocket Mortgage is definitely one of the weirdest ones I've ever analyzed. Simply because of the structure being extremely confusing, the questionable stuff with management and stuff. And I mean, this stock, let me like get into this. And I've made multiple videos about the stock at this point, and each time it seems like it keeps getting lower. It's definitely not a stock I'd buy, but I remember, and I remember very vividly when it was doing its run up, everyone made videos about how amazing this company is. It was so weird. Um, I wasn't doing YouTube at all, but no, wait, I think we was there YouTube? Yeah, I think we did. When was the big run up? It doesn't even show the massive run up. Yeah, definitely I was doing YouTube already. May, no. This is May, June. When was the massive run up? There was this massive run up when it just shot up, and it's not showing up on this Google. Garbage Google. I'm gonna sell my stock now because you won't show me the massive run up, because it was a short run up, so it's just smoothing it out there. Let me actually think. How do I? Oh, let me actually see if I do this in the more advanced chart. Does it show it here? No, it doesn't show it here. Ugh, annoying. All right, anyways, you guys all know what I'm talking about. Rocket did its whole big run up one time, and everyone was like, oh my God, Rocket. And then now here we are where we are. I'm shorting Google now. Yeah, that's a path to riches. Because the thing is, Google, why would not, I'm not selling my Google, even though I'm not buying my Google, buying more Google, not my Google. It is my Google. The whole thing's my company. Is because in essence, like, even if the stock kind of like drags down a little bit, I do expect them to consistently just buy back shares. It's a money printer. That company is just a beautiful, beautiful money printer with like one of the widest moats I've ever seen. I mean, look, you guys are all using Google right now to watch me, and look at the massive platform that is YouTube, the massive platform that is Google search, the massive platform that is Android. It's basically everything else they can just like kind of fail at, because they have more money than they know really what to do with. They also have Google Cloud, and everyone underappreciates Google Cloud. And I'm actually was working with some cloud engineers and just talking to them. Again, no one would hire me to program anything in the cloud. Just so we're clear on that. So this is not my opinion, but they stated that Google Cloud has a lot of benefits and a cost benefit analysis versus, like, Azure and AWS. But those three are fantastic. That's my understanding. Okay. Again, no one would hire me. I couldn't pay a company to let me work on their cloud and set it all up. No. So just so I understand who's saying these words. All right. I hear someone asking me about life insurance. Well, funny you ask. Today's episode is No, I'm kidding. Can you imagine? Just plug it in. Just like, today's episode is sponsored by Fabio Life Insurance. $10,000 per minute. It covers you for $1 trillion in tendies. All right, anyways. Taking a look down here. Yeah, I see some of you are saying basically like, yeah, Kiyosaki, Rich Dad Poor Dad, it's a book. So even though, we have all these questionable attributes attributed to it, it's not exactly like your life savings, right? Unlike, some other things that some people might spend close to 20K, that number's thrown around a lot. And I see, okay, someone's saying investing for your future. I thought Rocket went one day to like nearly like almost $30. I might be just mistaken, but even if it did, I made a video about Rocket a while back, and it fell more. And then I made a video more recently, 2 videos, because one was a correction or an addendum to the other video. And you see, we don't delete videos on this channel. We just make addendums, right? And then you guys can see where I messed up and then how I correct it. But anyways, and then I linked the new video in the comment section of that old video, or I think in the description, comment section and description, somewhere around there. But point is, this is the weirdest company I've ever seen. Dutch Bros is another one, but Dutch Bros I think is less hard to understand at the end of the day. And it's a coffee chain, so it is an easier business model to understand. And you don't have any of the whole macro interest rate bull garbage stuff that you have to worry about. So thank you for joining us. And then, yes, I'm working on the discovery analysis. I'm kind of just waiting to let the dust settle for that one, but I'm holding the stock. So And you might have noticed that for a brief moment, because the portfolio had to update, that it said my returns were like 600% because it was not doing the change. So obviously I didn't generate from the percent I have now to 600. And now the percent actually has been reduced in terms of gains, because I calculate the portfolio, and now whoever's tracking me, you'll be able to see like over time what my gains are, because I just provide like what are the built-in gains. So now you see like my gains have come down because I've sold ConocoPhillips and I've trimmed down BHP, which were two very good positions. And then Cardinal Health was another one that has done really well. I'm very happy with that. I'm very happy with Cardinal Health. That was a really good one. All right. Google Cloud is not printing cash. I mean, they're focused on growing it right now. That's kind of like, so it's like they're trying to charge less than their competitors in order to get market share, and kind of later down the line, hopefully print cash. No, because cloud margins are really good anyways, but it is growing faster than the rest of their business. And they are the smaller ones. So obviously, well, they're not the smallest, but they're smaller of the big three, which is Microsoft, Amazon, and Google. I also own Amazon. I don't own Microsoft. So I only own two of the big, but obviously Google's way bigger position. You know what? Meta should do a cloud. Why not? All right. It's 3:39 a.m. Well, now you have told me your location, Dark Knight, and I can hunt you down. I can find you in Germany. No, I'm just kidding. Okay, so Markel stock. Oh yes, I can talk to you about Markel. So Markel, yes, it is a mini Berkshire. That's actually what everyone calls it. But here's the thing: they're not going to be as good as Berkshire, because if you look at their portfolio, they invest a lot of their public stock into something like Berkshire Hathaway, right? So it's kind of funny that so much of their public portfolio is actually invested in Berkshire Hathaway. They do invest in a bunch of other stocks. I think they're perhaps a little bit overly diversified. If I was there, I would actually love to work in Markel. If you're listening, Markel, I would love to work for you. Absolutely love it every day. Okay, total cop out right there, but yes. Anyways, with Markel Group, I think the most potential lies in their private businesses that they're acquiring. The private businesses is amazing, right? So if that has so much potential to grow, and based on the size, because Berkshire Hathaway, it's the law of large numbers. They're so large at this point that they really do have to find big whales to hunt, right? They have to buy massive companies, and Markel just doesn't have to at this point. They have so much more opportunities. And another one that I'm going to plug in, just in case you did not know about this stock, is Boston Omaha. Now, the thing with Boston Omaha is it's less established than Markel, so I would put it into, just based on size, might be easier for them to fail than something like Markel at this point. But you have to know that Markel has gone through that step in the past, and now it is where it is today, where it has that reinsurance business segment, and it reinvests those premium profits into different not profits, but different projects. That's the better word. Similar to where I work at right now, but the company I work at right now, they're not an insurance company, and they're not publicly traded. So very similar kind of mindset, but this is more of like a family-run business than anything else. And so a lot of leeway and stuff like that, but very similar concept. You have excess capital, and you're like, what do we do with this capital? And the owners are like, well, I'd rather just reinvest it into the business and find things, and hopefully in a more tax advantageous way as well. And so Markel kind of does that too. Boston Omaha does that too. Okay, and I'm pretty sure there's some sort of relationship with the Boston Omaha CEO. But yes. I see down there we have a cloud comment, so I'll get to that cloud comment because I'm very excited for that one. How long does it take for you to analyze each company, make each video? Okay, so it that depends. Some videos, or at this point, I've done so much analysis that I could give you guys a what I say a decent analysis on a stock off the cuff, because I kind of, and anyone who's out there who's like an accountant working in the public space, whatever you're doing, whether it's auditing, taxation. And you can actually attribute this to even your own work, whatever work you're doing. After you do it for so long, you can kind of know what to look at, and then you just got to be careful not to be, get lazy about it. But you kind of know where to go immediately. And then sometimes I like to do it. Sometimes I am doing an analysis kind of off the cuff, and you guys are seeing kind of my raw thoughts, because I don't like to often prepare in advance, because then I have you don't get to see like that curiosity aspect where I investigate something. I might say, oh, well, what is that? All right, let's like find out why that is. I think that's very valuable, or that can be very valuable to viewers, instead of just saying, oh, this is this because of this, because I already did the homework beforehand, and here we are. It might make the videos a little bit longer, but I think it has value. But yeah. And the NordVPN. Yeah, I'm sponsored by NordVPN. I've actually now, because I used to think, I was like, wow, I heard that you're supposed to get all these sponsorship requests and all that. I wasn't getting them, so I was like, dang, okay, no one really wants to sponsor me. Then I looked at my spam folder, and there it all was, and I was like, oh, okay, that's where all of it goes. So lots of, like, I don't know, it's weird. It's not in like most of the emails aren't even fairly coherent. So I'm actually very interested in like what the heck they even have to say, but they're not very coherent. And I don't even know what they want me to even speak about. Sometimes it's like, I love channel very much, like business arrangement. And then like, I'm like, what? Okay, I can kind of understand what they want, but and then I read like some sort of like weird name, and I'm like, oh, it's probably crypto, it's probably an NFT. There's so much of that out there. But anyways. Let's see here. Yeah, you got to be patient with a lot of these. And yes, that's probably where I'd love to work at. Markel Ventures. The private side of Markel is what intrigues me the most. Yes. And you know what? Why not? Well, I'll see if one day I work there. All right, so we have, here we go, QFin China stock, and then we'll get to your AWS comment. What's this QFin? QFin China stock. Okay, so $1 billion market cap, dividend of 7.2 PE. Already market's kind of like saying, what the heck? It's very cheap for a reason. 360 Biotech Inc. Oh yeah, this one's on the list. That's why I'm like, this is familiar. So I'm gonna do a video on this one, and yeah, I'm definitely gonna do a video on this one, because it is on the list. And just so for the other subscriber, when we were talking about your two Chinese stocks, I've actually decided, because I think there'd be good case studies and in conjunction. And the reason why I was hesitant about making a dedicated video to them is because of their size. But I think based on what we already discussed here today, I think they actually might deserve a case study video for two of them. Well, both of them. And in that case, I think the audience can learn something, or at least someone can learn something. Maybe not, sometimes every video is not dedicated for everyone, but it's dedicated to someone, and it's just out there. But yes. All right, so now we're on the AWS comment. What is this? So I'm in the cloud space. I think AWS for small research project, academia, Microsoft Azure caters to businesses migrating on-prem cloud to cloud. Google and Ally need to figure their angle. Yes. So like the other ones are, okay, so I get that one. Yeah. So the other ones are already specialized in what they're good for. And Google's kind of like, I don't know what I want to be. I will say that I'm pretty sure the capital mindset is going to be running on Google's, not Azure. We were looking at Azure, but I think it's going to run on Google. Nope. Remember, that is going to be a project that will be finished up around August of this year. And I just mentioned that because it was Google. It's going to run on Google. All right, Google Cloud. Fabio did not investigate Farmy. He just disregarded it once. Yeah, well, I mean, like, in terms of spending the whole hour, we probably wouldn't talk about it here live, because I wanted to give everyone a chance to ask questions. But like I just said, there's gonna be I've decided I'm gonna do like a dedicated video on it. I might do it this weekend if I have the time, but yes. And Strongman comes in. He says good night to everyone. So good night, Strongman. Enjoy your rest. He needs it, everyone, because he is going through busy season. And if you have not done a tax accounting job or role, busy season is hell. Okay. I have a close friend who is going through that right now. And yeah, Quifin, I second that request. They pay a big dividend. Yes, they do. It's 7% dividend, but that's often a red flag. Okay, so hi Fabio, did you have time? MTY? No, I have not. Look, my work lately has been beating my ass. You see these bags? I am a young man. I should not be having bags, but I'm having bags. These bags are developing because the sleep is non-existent. That's why Saturdays are for the boys, everyone. Saturdays are for the boys. So that Saturday is my rest day, and it's supposed to be my recovery day. And then Sunday, believe it or not, I do work on Sundays. Not as much, but I do work on Sundays. And then the week, forget it. Forget it. So yes. Are my bullish on Zillow? Okay, so Zillow, yeah, I am still bullish on Zillow. Sorry, it took me for a second. My brain like shut down. It wasn't because I was questioning my brain just went boo, Gotta drink more crack coffee. Hold on. Yeah, I am still bullish on Zillow. I think they're just full of potential. They're like a bundle of potential, right? So I think of them as what potential they could be is the Google of home buying, right? Because quite honest, like every time I look at homes just for fun, I just go on Zillow, right? And Zillow, I want them to pivot to a point where they make it super easy to sell the home. And then that's why I'm invested in it, right? I have that vision. And if I think management is taking steps towards that vision, which I think they are, because I bought Zillow after they got rid of that garbage business model, which we originally talked about Zillow. And then we were like, well, this is what I hate about Zillow. And they got rid of it like a couple weeks after that video, which was amazing. One of the earlier videos on the channel. But after they're gone with all that, wasteful stuff, just buying homes and stuff. Now I think the CEO is focused on what I think is really important. And if he executes well on it, there's a lot of potential there. But that's all it is right now. And that's why it's in the speculative bucket, right? And I think it's like at 1% of the portfolio, and it's just barely up right now. But I totally expect in a down market that's going to come down. But that's completely fine. And that's the point of having a broadly diversified portfolio, or even, for example, we get back to like index fund investing. The reason why it's a successful strategy is because psychology. So if Zillow goes down to zero, goes bankrupt, I won't really feel it, and it will make it less likely, because even though I state that, I'm not very emotional, blah 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 blah, understanding that I am human and I will be subject to the regular old psychology that anyone else will be affected by, I have to try to plan accordingly, and position or size the positions in a way that I can hopefully act responsibly. That's another reason why I think it's important to position size appropriately. Okay, and I see you're celebrating Elemento, because yes, I will do a video on those. I have in the past in private, for example, one stock that I mentioned in the past that I put my sister's portfolio into, and it was really good. I wish I put my money into it, but I didn't have my money into it. And oftentimes that's sometimes how it happens. So I make sometimes a decision, or people in general, you make a decision based off of your knowledge base, and you're doing it for someone else, and you're actually trying to do good by them. And you put them in this case, to be hyper specific, to stocks, I put my sister's custodian account because she's underage. So I put her portfolio into a company called Texas Pacific Land Trust. At the time, it was an MLP, and it was actually in the midst of the pandemic. And funny story, which we laugh about a little bit, because I told her that timing the market is impossible, right? Or not impossible, but very difficult, and oftentimes will be just luck. Well, not too long after I told her that, we were in the process of switching her brokerages, and it was a pain in the butt because her brokerage was originally under one of my parents' names, and so they couldn't just transfer it over quite easily. So we ended up just selling everything. That was in February 2020. And and then we didn't have our new brokerage set up with in the custodian account, which was made it very easy where I could put money in there and she could inherit that money upon when I decide when she earns it, not when she earns it, but upon reaching a certain age, the money just passes on to her. But it was hilarious because it just literally just switched. Well, we had March, right? And then I think the account was finalized and set up around March. And I joke with her because she got really good purchases. I mean, she oh my gosh, she like got realty income at really good prices. I put her in some stocks that I was invested in too, obviously. But then one stock in particular that did really, really well was Texas Pacific Land Trust. And that we're going full circle back to that. And that's a royalties-based business, high margins. They just switched to a C Corp. So, so yes, I have analyzed those in private. I haven't made any videos on it. And I know all of you asked for that. Whole backstory. All right. So do you think America's debt could cause issues for growth and future returns, or does it not matter because U.S. innovation is ahead of everyone else? U.S. innovation is ahead of everyone else, but how long will that last? That's like assuming that they're able to maintain that. So perhaps, but the actual issue with the growth, and I think Dr. Lacey Hunt is a perfect place I'd actually direct you to. But I'd say that you should really read his work. His work is wonderful in that aspect. He actually points at the debt problem, and I have some videos on it actually where it actually showcases research. But there is cause for concern about debt. It does appear that you can't take on debt forever, unlike what some economists do think, right? Some modern economists might think that we can, but and actually I will drop that video. Watch out for that video. In there we talk more about taxes, and we take CNBC's take on taxes and why it's kind of a little bit on the cringe side. And I think I was like kind of harsh on them, but they bring in some people who are supposed to understand these things. And then towards the end of the video, which is the most important part, I showcase some data showing about how taxes are collected, some phenomena that I actually was involved with in studying in university. And they're really interesting stuff. Well, I think it's interesting. It might be boring to some people, but I think it's really interesting because it's a phenomena. It's not like an opinion. It's an observation that we observe, and there's theories as to why it exists, but no concrete theories. And it has a lot of implications once we observe and once you realize that this phenomena is a thing. All right, so watch out for that video. Okay, so I'm going through it. Yeah, I can see. Okay, you guys are talking about a stock there. Terry Smith and his investment approach. No, I have not, but it is on the list because I was going to do a video on that one. And actually, let me bring it closer to the top, because I have also like I still have to go through the requests that I have to review people's portfolio. Yeah, because I still have to do Robert Reynolds, Joseph Carlson, Average Joe Investing, Jimmy, and the Patient Investor. I have to review all those guys. And maybe I do like one just day that I just review everyone's and then just do it like that. I don't know. I don't know. Maybe you just grow it. I don't know. but I just don't know how to answer that question. But I think it's a funny question though. You'll see me in No Shave November. I am a hardcore participant of No Shave November. On November this year, because obviously I'm not going to stop doing YouTube videos. We'll have a hot cocoa live streams. Like we'll make it a thing throughout the whole month. And I encourage everyone to, if you guys like hot cocoa, get some hot cocoa during those live streams, and we'll talk. And then grow the beards out with me. Try to do it. Just don't shave. No shave November. But yes, I will do more macroeconomic videos, again, because I'm just trying to keep up with wallet content, which I'm very thankful for all your requests. Because to be honest, it was a funny thing. When I first started the channel, I was like, oh, it'd be cool to do subscriber requests. And then I was like, well, it's we're probably not going to get that much subscriber requests. And then no, huh. If I tell you the quantity of subscriber requests, because keep in mind, there are the comment section subscriber requests, but then there's the emails, and then there's the Instagram. And I imagine if I start posting on TikTok, there's going to be TikTok subscriber requests. So I will have to do like some sort of voting system eventually, because I am just a human being. Unless I would hire like a whole team. I'm not going to become a research firm, guys, but I just hire a whole team and just like these guys fill the room with interns. Be like, all right, you guys do research, and just pay them nothing. Just absolutely pay them nothing. Just I pay them with experience. Amazing. All right. I don't trust anyone who doesn't. Yeah, neither do I. If you don't like hot cocoa, well, this is crack coffee right now. So, and by the way, my friend group and I, we refer to this as crack coffee. So, but if you guys have any like other questions, let me know that regarding to stocks. Okay, because here's a question that just came in, and I'll get to your Airbnb question. But because I just mentioned this, there's about, let me tell you the number. In total, if we include we include these ones. There's about 77. There's about 77 individual. So some of those have been repeated. So because some people ask for the same stock, and then what I do is I try to prioritize the ones that I get multiple requests, because that's just the way I decided to just do it. So to try to create some sort of order from the chaos, because then I have to confide with work and make sure everything's all right there. But yes, that's how many there are. It's like 76, 77. What price would I buy Airbnb? Oh my gosh. Okay, Airbnb is a fantastic company. I am really interested in Airbnb, similar to a Spotify situation, where I really like Spotify. I really would love to own Spotify. I just can't wrap my head around it yet, where I can figure out a price that I would buy Spotify. I think Spotify, if anything, would go into the potential bucket, because it's the only current living company that I can see that can potentially challenge YouTube. The only one. I don't think anything else can. I think there's all these other alternative platforms. I don't think any of them have a chance at the present moment at challenging YouTube. Okay. By the way, I'm going to have to start wrapping this up, because I do have to pick up the folks from the airport. I will be live streaming again on Sunday. I know I'm live streaming a lot this week, but I will be live streaming again on Sunday, because I said to myself, I'm doing a short one today. I'll do a longer one on Sunday. So to get through more different questions, because how my live stream kind of works is, the amount of people, it kind of slowly changes. Some people go to bed, and then some new people come on, and then they ask questions, and that's the whole point of these live streams, is for you guys to ask me whatever you guys want. Or if someone disagrees with me, to challenge me live, so I can't look stuff up. I can't be like, haha, like, let me find the answer. I think it's a good way, a good faith way of saying I want to talk to you guys. But here we go. So all right, you could do a poll on the channel for which stocks you want. The thing is, the poll, I'm trying to create a system where you put in like a ticker, and if that ticker is repeated, it counts it. So because a poll would imply I pick like 5 stocks, right? I just pick 5 stocks, put it there, and then people vote on that. I don't want me to have any implicit like choice in there. I have my choice in my stocks. Those are the stocks I'm investing in. That's like my input. My input is doing that. And then I want the audience to have some sort of sway. So and I'm actually trying to integrate it, because I'm going to be launching very, very, very shortly an actual community Discord server. And by the way, just so everyone understands, it's like it's kind of like going to operate on a freemium model. So there's no payment necessary on it. There is just one tier that if someone wants to, they do that. But both tiers, I'm trying to get them so they all have voting. And then it's good that if you guys want to join, by the way, you guys don't have to talk there, because I know Discord servers can be like, but at least from different perspectives. But you can talk to each other and stuff like that. And I can also send everyone notifications on when videos come out and stuff like that. So it'll be nice in that respect. And with that, I know that I can get like a polling system in, and I think it's going to be very effective. I can get a bot to like count when someone in whatever chat room they're in, to say, okay, they want this request, and then it kind of accumulates the votes, and I can go on there and say, oh, well, this one is what everyone's kind of requesting. And then I have to be careful, because that bot has to kind of figure out if anyone's spamming, because there is a vetting system regardless, regardless if it's in the in the like the free section or the paid section. It's I have moderators, and they're human. They're going to be working on the server. I have 2 moderators right now, but the I'm going to have to figure out. Well, not figure out a way. We kind of designed a way where it vets and supposed to filter out any like spam bots, because in case anyone thought of that, yes, because that could definitely happen. Someone could get a spam bot in there and just spam the voting system, and then I have to do like whatever the spam bot decides. But yeah, that's definitely it. Because I think that was the best way, because I was always thinking, like, if I did the YouTube, I thought about doing just YouTube voting, and but the thing is, I choose like what you vote on. It's like, can you imagine? But I think that would be way better. But it's going to be launching like any day now. I'm in talks with my 2 moderators to just launch it, and then we're gonna just have it. I'm gonna just put in the comment section or the description, and you guys join if you want or not. But yeah, the Discord's going to be interesting in that, right? Facebook, Airbnb questions. Okay, got to get through these questions, then got to go pick up the parents, otherwise I'm going to be late. How many stocks how many stocks? Okay, I already answered that one. How do you revisit the thesis on these stocks? Often, if they're in my portfolio, I revisit them kind of like once a month at least. But yeah, not too late to be a Star Wars. Oh yes. Star Wars. We talk about Star Wars lore. I love Star Wars. I do love Star Wars. Well, I used to. I kind of like less excited about Star Wars because of what Disney did. Unfortunately, they killed the child in me. Airbnb has a moat and a network effect. It kind of like the other stuff, but not necessarily in terms of property. That's the one concern. If the network effect isn't that strong, not good. All right. And yeah, you exactly what you're pointing out. But if Facebook achieves the same kind of level of network effect, as a payment processor, yep. I love portfolio rescue stream. I would love a portfolio rescue stream going through a few tickers people have large losses in. We could do that. No, that like, look, these streams are like kind of requests almost. So I can dedicate some streams. Like I had a stream where I dedicated it to just analyzing stocks live, and that was, I think, the last one I did, where I was testing a new software. But I'm definitely going to do those again. Those were fun. So kind of a community guided a live stream of looking up stocks. I'm totally down for that, and that too. Totally down for that too. Just looking at that's loss porn. Right, we have a word for that. That's definitely loss porn. No, I haven't changed my thoughts on Tesla based on the recent interview. The whole point of that interview was to show that, one, it's kind of like I live what I preach. I think that all investors should always maintain a sense of open-mindedness and try to discuss with people who have different thoughts than they do. And you can kind of see that it wasn't a debate. It was a discussion. And so I wanted to get more what the guest thought of. And, they were the star of the show in that aspect. And, some people I saw some comments saying I wasn't, pushing back hard enough. And that's all fair, but you missed the point of, maybe the thumbnail was the misleading part, because I get it. The thumbnail was a little bit clickbaity. So, but yeah, it hasn't changed my thoughts. I just wanted to, get someone else's thoughts. And so I always seek to try to understand what someone who disagrees with me is thinking. What are they seeing that I am not seeing? And I always look for that. I think that's very important to be as an investor. And so not only that, I say that, and then I go out and do it. And I hope that video shows that. All right. Being a Discord. Yes. So you see like all these comments on Discord. Well, I'm happy that you guys are happy that Discord is coming. I literally will be dropping like any day now. And yes, that was the obvious choice when I found out that Discord can do all that stuff. It makes my life a lot easier. I can organize things and do these polls much better. Okay, because now it's kind of like chaos. And then I'll make a hard rule, like I'll take a request only on the Discord server, and it's not like I'm covering it behind like some sort of paywall, because it's not. It is. There's two types, right? So it's not like it's unfair and saying, oh, now I have to pay for. No, it's not that, because I'm not charging for research, right? The other tier is more like a donation, if anything. That's really what it is. It has other chat rooms, and I think I'll do like Q&A stuff on there and stuff, but yeah, you can post through Discord. Yep. Okay. Have you thought about grouping together subscriber requests, talking to industry? Yes. No, I actually do that when a lot of requests come in for a particular industry. Boom, I'll do that industry. And I've done that with like the home builders, for example. Done that thing with insurance. No, I didn't do that with insurance companies, but I try to do that when possible. I did it with REITs. I covered realty income and Sarage growth. Oh, and I'm so sorry. I did see someone ask something about realty income, and I didn't answer your question. I love realty income. One of my favorite REITs. I really try to answer all your questions. I'm kind of like rushing through with my eyes going da, 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 da. So I apologize. And I actually do have to get going, but let me go real quick. Speed run. The popular fines. The popular stocks will win. No. You got to also understand. I'm going to be doing a whole variety. So not just the ones that everyone wants. That just tells me what to take priority on. Okay. And there will be actually a time when I'm going to be restricted on what stocks I can talk about because of my new gig that's going on. Okay. You got a point, JP. What broken clock is right twice a day. Disney value usually kills parents. Disney usually kills parents. Now they kill the child in you. Yeah, true. Thanks for the live stream. Oh, thank you. And I don't know what the first part is, but good vibes. Yes. AMD evaluation. Okay. I have done PayPal and I have done AMD. Definitely check those out. But, I'm always revisit stocks when I can. All right. Let me see. Have been awesome. Okay. So I will see you Sunday. Looks cheap future. No. Okay. They're looking better now. Okay. And I'll actually revisit PayPal. I will revisit PayPal because I think PayPal's down. Real quick. Oh no, where is Elementals? I don't know where it is. Oh, this one? Yeah, that's pretty funny. That's pretty funny. Hey, no worries. Hey, no worries, everyone. Thank you guys so much for saying such nice goodbyes. You guys say such nice goodbyes to me. What a way to end a Friday. All right, guys. So I will see you guys on Sunday. Enjoy your Saturday. Take a break. And yes, thank you guys so much for being such wonderful audience. All right. I'll see you guys.